Welcome to the very first podcast from the Gold and Silver Report. My name is Ron Guth, and I will be your host today as we examine what is happening in the gold and silver markets. Today, December 1st, 2025, gold closed at $4,230 per ounce. This quote comes from kitco.com and represents the bid price at the closing of the New York market. We use the bid prices from Kitco because that is the same figure that is used in all of their handy and useful charts. The recent record price for gold was $4,377 set on October 16, 2025. Interestingly enough, on the following day, my wife and I were in downtown Sydney, Australia, when we saw a long line of about 75 to 100 people outside of a shop. The shop turned out to be the ABC Bullion Shop, which is a large buyer and seller of gold and silver bullion in Sydney. We asked some of the people in line why they were there and whether they were buying or selling. To a person, they all said they were buying, primarily because they had heard in the news about the record prices of gold, and they simply didn't want to miss out. This, of course, is the opposite of a buy low, sell high strategy. By the time we left Australia a few days later, gold was already down to around $3,900 an ounce, so their golden purchases were down over 10% in just a few days. Now, that is not atypical of the sometimes volatile precious metals markets, and as it turns out, gold has recovered to $4,230 today, and we'll see how it does in the coming days. Now let's turn our attention to silver, which has been on an absolute tear lately. Today, December 1st, it closed at $57.89, which is an all-time high for silver. What is happening to cause this seemingly inexorable rise? If you look at the news feeds on Kitco, you will see a variety of explanations that caused gold and silver to rise. Here are a couple of sample headlines. First one, political, fiscal, and financial risks will boost gold demand even higher in Q1 2026. Here's another one. Fed rate cut odds boost gold prices, investor demand for silver adds to physical squeeze. Third headline. Positive gold prospects driven by geopolitics and Fed expectations. Now, these are all sorts of generic explanations, and they really don't give you a specific instance or a single item that might drive the gold and silver prices up or down. However, there was one headline that stood out on November 28th. Russia's central bank forced to sell gold reserves to cover budget and support the ruble. Diving into this article, we read that the Central Bank of Russia has been selling some of its gold reserves into the domestic market for the first time ever. Now, keep in mind that the Central Bank of Russia is not the same as the National Welfare Fund of Russia, which also has its own gold reserves, but those have been depleted by 57% as well. The Central Bank of Russia may sell as much as 230 tons of gold in 2025 and perhaps another 115 tons in 2026. You can bet that this will have a significant downward pressure on the price of gold starting just a few days ago when the headline first appeared. Now, this does not mean that the price of gold will go down. It could, but it will certainly stall any upward momentum. Silver, at least at present, is not suffering from a big influx of physical silver into the market. Instead, the opposite is occurring. Over half of the silver stocks at the Shanghai Futures Exchange have been withdrawn. COMEX silver reserves are down 14% from their peak in October. Now, where is all that silver going? Apparently into ETFs, or electronically traded funds, where investor demand is forcing companies to increase their own reserves. At some point, these imbalances will even out, and the silver squeeze will end, but the current high price of silver indicates how desperate people are for physical silver to cover their positions. One other thing that may be driving the upward price of silver is the historic ratio between gold and silver. When the U.S. Mint began striking coins in 1793, the gold to silver ratio was approximately 15 or 16 to 1. At today's close, December 1st, the ratio is at 73 to 1. At one point in the past, the ratio was as high as approximately 100 to 1. Now, could there be a drive to, say, a more balanced ratio of like 50 to 1? For that to occur based on today's prices, gold would have to go down to $2,895 an ounce, or silver would have to go up to $84.60 an ounce. Which is more likely to occur? Well, actually, whether there's a move to a more balanced ratio, we just don't know. But this is an example of the speculative thinking that goes into predicting the prices of gold and silver. When we're guessing about what gold and silver would do, we need more factual information than just guesses. And as you make your buying and selling decisions, look for things that are more impactful on the price of gold and silver, not just guesses, but things like the Russian divesting of their gold and silver to see if that will have a significant impact. Then you can more wisely decide whether to buy or sell. In the coming days, we'll examine the price of gold and silver. We'll just follow its rise or fall, and we'll give you some more insights into what we think are driving these changes in the prices of these precious metals. Thank you for joining us today, and we hope to see you in future podcasts. Please consider helping us grow the channel by subscribing, leaving a like, and a comment.